this. We are about to get into the stock market tea of the week, okay? Where I give you the rundown on what happened in the market this week. If you scratching your head because you like, the market fell, what's going on? Or maybe the market is on the up and the up and the up and the up, and you like, what's going on? Or maybe the market is flat or volatile, but you good, okay? You good, because I'm going to give you the rundown on what the heck happened in the stock market this week, okay? Now, for those who don't know me, hi, my name is Paris Smith. I was able to retire myself from the 9 to 5 at 24 years old through trading and investing in the stock market. I was able to make a 6-figure annual income through trading stocks without reading charts, day trading, all of those things. And my income is consistent, guaranteed. I know how much I'm making. And I come here to bring you all the gems, okay, the sauce, okay, and the tea. All right, now let's go ahead and lock in. We roll up my sleeves now. Okay, so during this week, and I'm looking at, when I'm looking on this side, I'm looking at all the articles and stuff because I want to give y'all like articles in case you want to read it on your own, okay? So anyways, and my notes, I got my notes here too. Okay, so now during the week, November 11, which was Monday, all the way until today, November 15, the market was a little volatile, okay? The market was a little volatile. In the beginning of the week, that thing was going crazy. That thing was going crazy. And let me tell you why. It was going crazy because of Trump being elected president. So last week, the market was going crazy and all that stuff. And it was a little continuation from that starting on Monday, right? But then it got a little choppy. So I'm going to break it down for you. Okay. So the market experienced significant volatility influenced by political developments, economic data, and corporate earnings. So we are in the season of earnings as well. And depending on the company, depending on like the sector and all that stuff, if they're doing good, the market's going to go up. If they're not doing that good and they carrying a lot of weight in the market, then the market going to fall a little bit. It's going to fall with it, right? Okay. So let me just tell y'all this. The stock market love a good election time, okay? The stock market love a good election time. It's just like the market is optimistic. Like, who's going to be president? We have someone new that's going to be running the country. Like, what are they going to do with the economy? Like, what are their policies going to look like and all of those things, right? So the market loves when it's election time. And it loves when there's a new president. So, of course, all last week, the market was doing really, really well. Even before it was like election, where you go out and vote and stuff like that. Maybe like a month before, the market was still doing real good because it was optimistic. Okay, so boom, y'all got that. Okay, so listen. The market performance, there was an early week rally. Following Donald Trump's election victory, major indices surged. Y'all, wait until I tell y'all this. With the Dow Jones Industrial Average, which is the Dow Jones 30, the Dow Jones have 30 companies in it. I told you about that. Closed above 44,000 for the first time since November 11. The Dow Jones closed at 44,000 for the first time since November 11. Y'all know I told y'all when it comes to investing in stocks, if you want to build your wealth, if you want to build explosive income through dividends just by investing into stocks, I always tell y'all the Dow Jones 30. Okay, just keep that in mind, okay? Keep that in mind. Now, the Wall Street Journal says this. And y'all, some of these words, they should be ashamed of themselves. I'm going to sound it out, though. I'm going to sound it out. Okay. All right. Look, so the Wall Street Journal says that Donald Trump's systemic We're going to skip that word. Election. Donald Trump's election victory kept reverberating through markets, sending Bitcoin prices over above 87,000, which is wild. We're going to talk about that too. And the Dow Jones average to close above 44,000 for the first time. This is the Wall Street Journal. Investors have piled into stocks after the U.S. election, relieved that the contentious presidential contest is over, and confident that Trump's victory will lead to easier regulations and a flurry of deal making that will give markets a boost. Wild, right? The optimism sent the U.S. stocks to their best week of the year. And the gains continue Monday. The U.S. dollar strengthened and major index continued their record run. Yo, let me tell you, I told y'all that the market love when there's a new president. The fact that Bitcoin went over 87,000 is crazy too. Now, I don't cover Bitcoin here, but I know like very little about crypto. But the fact that Bitcoin is almost at 100,000 blows my mind. And like the market is doing so good that even Bitcoin is doing so good too. It's amazing. But anyways, let's continue. Let's continue. Let me close this out. Okay, let's continue. Now, the S&P 500. I told y'all S&P 500 and the Dow Jones are the two index that I look for stocks to invest in that builds my wealth over time. Stocks that offer dividends, that two things, builds my wealth and also gives me an income through dividends. And 3, those are the two exchanges that I look for stocks to trade cover calls on. The fact that the S&P 500 also reached a new high too. It reached a new high of 6,000 points. It went over 6,000. And just think about it. If your money is in these stocks that have fundamentals and all of that good stuff, like it's foundationally strong, just because the S&P went to 6,000, don't you know that your wealth is growing as well? 6,000 is its new high. 44,000 is the Dow Jones new high for the first time. All the stock market wants to do is go higher. If you have money sitting in your bank account, in your savings, and it's just sitting there not making no money, maybe 1%, 2%, cool. Just put it in some stock that have the fundamentals and all that stuff. Now, let me continue. Okay, so there was a mid-week decline. There was a mid-week decline. So listen to this. The initial rally lost its momentum midweek as investors reassess the potential economic impact of the new administration's policies. So by November 14th, which was yesterday, was Thursday, the S&P had declined by 0.6%, and the Dow Jones declined by 0.5%, and the NASDAQ by 0.6%, right? Now, the thing is about that, when it comes to the stock market, every single day, the stock is not going to go higher. Like every day is not going to be a green day. There may be 3 green days, which means just the market going up and up and up and up. Then it might be a little pullback, and then it's the next day there's forward momentum going higher, then it may be a little pullback. But at the same time, if you look at like the S&P or the Dow Jones chart, that thing is looking like this, like it's going up slowly but surely. And that's what we want. We want slow growth, slowly but surely, slowly but surely. Okay, so this is the Associated Press. What I'm about to read right now is the Associated Press. Okay, so U.S. stocks slipped as the market's big burst following Donald Trump's election continued to cool. Now it's cooling down. So last week the market was going crazy. It was going up, 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 up. That thing was going crazy. Then Monday came around, that thing up, going up, going up, going up, going up. Earlier this week, it was going up and up and up. Then it kind of cooled off a little bit. They're like, all right, Donald Trump won, you know, all right, you understand now, let's get to business. Now he's talking about his policies, he's picking different people for different roles and all that stuff. So no, they're starting to cool off a little bit. So the S&P 500 dipped 0.6% on Thursday, which was yesterday. The Dow Jones average dropped 0.5% and the NASDAQ sank 0.6%. Several areas of the market that had bounced highest following Trump's election reversed their momentum and led the way lower. Now listen to this though. Listen to this though. I told you guys that the S&P had reached its height of 6,000, right? Which is so crazy. Like, it's lit. Look, my retirement account, booming. Okay, retirement account, look at going because the S&P went up, right? The S&P went up. Too good to me. So let me continue. The S&P though, it fell 36 points, which is 0.6%, to 5,949 points. It went to its highest of 6,000 points, and it came down a little bit to 5,900 points. Them funky 36 points, we don't care about that. It can come down, and guess what we gonna do? We gonna buy it up. Because it's gonna go higher, right? We just positioning ourselves. But 36 points is nothing. Okay, 36 points is nothing. 0.6% is nothing. Let me continue. Now, the Dow Jones. The Dow Jones fell 207 points, which is equivalent to 0.5%. That thing barely moved. So it went from 44,000, it was a little above 44,000, and it dropped to 43,750. That's cool. We don't care about that. We cool. That's fine. And that was on Thursday. So the market was going up and up and up Monday, Tuesday, Wednesday. And then, it started to fall a little bit towards the end of Wednesday. Then Thursday, that thing, Okay, let's continue. And today's Friday, so it's a little lower. Okay, so let's continue. Okay, so that was the mid-week decline. Now, the end of the week, volatility. Now, on November 15th, which is today, futures for major indices fell, with NASDAQ 100 contracts down the most. NASDAQ is cool, but, NASDAQ fell. Where am I? Okay, the indices fell. Okay, so with NASDAQ 100 contracts down the most, indicating a potential downbeat end of the week, right? Now, this is the Wall Street Journal that I'm about to read from. And this is just talking about, like, what happened when what really happened. So the NASDAQ is another exchange. And so this article is just talking about like what happened. So there's a lot of huge pharmacy companies that's a part of the NASDAQ and all that. They're talking about Trump's pick for RFK Jr. And when he picked RFK Jr., the pharmaceutical companies took a little fallback. Okay, it fell a little bit. It did. It fell a little bit. Okay, so let me read. Okay, this is the Wall Street Journal. So it says stocks fell Friday as traders slashed expectations for a December rate cut after signals from senior Fed officials and stronger than expected retail data. Let me see. Yeah, so stronger than expected retail data. Now, Fed Chair Jerome Powell, and let me tell y'all this real quick. Jerome Powell, when you hear that name, that's the money man. Okay, that's the money man. When I say Jerome Powell or I say the Fed Reserve, that's the money man, okay? So he the one that make the decisions on like slashing different things like the rates and inflation stuff, you know, all that stuff. I'm gonna get into the article. I'm gonna explain a little bit more. But when I say Fed Chair, Fed Reserve, Jerome Powell, that's the money man. Okay. Now, Fed Chair Jerome Powell said Thursday the solid economy would allow the central bank to take its time in deciding how quickly to loosen policies further. Meanwhile, new data showed 2 months of surprisingly robust growth in retail sales, adding to evidence of U.S. economic strength. Okay, let's continue. Now, I told you about the pharmacy companies, okay? Keep that in mind. Also weighing on the United States and global markets, shares of major drug makers, including Moderna, Pfizer, AstraZeneca, dropped on Friday after Trump nominated Robert F. Kennedy Jr., a vaccine skeptic, to be Health and Human Services Secretary. The market did not like that. So the NASDAQ, that thing came down. Okay, that thing came down today. That NASDAQ, that thing came down because Robert F. Kennedy, he don't like them vaccines. So them big pharma companies, big pharma came down today. Big pharma then came down today. All right, let's continue reading. So the NASDAQ just have a lot of pharmaceutical companies in it. And you know, the big boys, them big boy companies. So the big boy companies, if it's going to slide down a little bit, they're going to bring that joint down with it, the index down with it. So that's all what that means. Okay, so let's continue. The post-election rally continues to cool. Told y'all that. It's cooling down. So that's why the market is kind of, it's a little volatile right now. So the post-election rallies continues to cool as investors process potential policy changes under the new Trump administration. Major U.S. stock indexes all near record highs. We making money. We making money while we sleep. Okay, this is building the real wealth. You invest one time and it will pay you forever. Okay, let's continue. Major U.S. stocks all near record highs look poised to end the week on a downbeat note. Now, although the end of this week, it was coming down a little bit because, the policies and Trump picking certain people and all that stuff, there is still people are still optimistic, right? People are still optimistic. So let's continue. There's something else. Let me see if I want to read this next paragraph. Okay. Okay, I can read this too. This is something else that would be kind of cool to add. So here's a quote here. It says a quote from, her name is Callie Cox. Investors are having to juggle a lot of unknowns heading into next year, which is why we could see some volatility in the market ahead. That's what Callie Cox says. So although the market is very optimistic and excited, the market is always optimistic and excited, by the way, when we are in election time, when there is a new president. That's how it is all the time. But now it's starting to chill out a little bit. Now the market is like, okay, what is Trump going to do next? Like, who is going to be his next pick? How will his policies change, adjust? What's the new stuff coming? Like, what's coming? What's coming? So that's how the market is. The market eyes are like peeled on Trump. That's all. That's it, and that's all. Okay, so now let's continue. And I read that from the Wall Street Journal. Now let's continue. So what were some key influences? Okay, what were some key influences of the market? So first we have the money man. We had the money man. We got the money man, Jerome Powell. So one thing I want y'all to know is Jerome Powell indicated a cautious approach to furthering interest rate cuts. His job is right now is to cut interest rates and all of those things. Interest rates and all of those things. Y'all know, like, we in inflation and stuff high. You already know, just to get a house, the interest rate gone crazy. Just stuff like that. Everything is high and all that. And when Jerome Powell cuts the interest rates, the market loves that so much because it just brings a positivity. It brings good news. People are positive that prices are coming down, things will become affordable, the economy is looking better, stuff like that. So that's pretty much what that means. So anyways, Jerome Powell indicated a cautious approach to further interest rate cuts, emphasizing the economy's robustness and suggesting no rush. He said there's no rush to lower rates. Y'all know, like 2 weeks ago, he already cut the rates a little bit and the market went crazy. When I say like 2 weeks ago, that market was going so crazy because of the election time. And then the money man cut the rates. And then Trump president, the market went so crazy. It really did. It was a time, boy. It was a time, but it's okay. We always have more opportunities, okay? You will always have another opportunity. That's why I love the market so much. Okay. Now, let's continue. Maybe I should read this article for y'all. I'm going to read this article for y'all. Based on the money man, Jerome Powell. Based on the money man, Jerome Powell. Let's see. Where do I want to start? Where does it start? Okay, that's what Powell said. He said at an event. Okay, let's read it. So the economy is not sending any signals that we need to be in a hurry to lower rates. This is what Powell said. The money man. He said the economy is not sending any signals that we need to be in a hurry to lower rates. With just 18 months to the end of his latest term at the helm of Fed, Powell, the money man, Powell, seemed keen and sidestep. Hold on, where am I? Powell seemed keen to sidestep questions on the policy decisions of Donald Trump's incoming administration. That's interesting. That's interesting. So basically, he's kind of cool with it. And, you know, that's one of the influences. Anytime Jerome Powell talks, everybody listens. Whenever he has a meeting and he talks to investors or whatever, everyone is listening. And so he has spoken this week. The money man, Jerome Powell, has spoken this week. Okay, let's continue. Let's go to the economic data. So, retail sales, this is another influence of this week that influenced the market. Okay, so economic data. So, retail sales and industrial production data for October was released. Okay, providing insights into consumer spending and manufacturing activity. Let's read that a little bit. Let's read that. Let me see. I think this is it right here. Hold on. This might not be it. Oh, let me just click on. Let's see. Hold on, y'all. I want to read that for y'all. I'm going to read the economic data for y'all. Okay, here it is. Okay, I had the right one. Okay, so where am I? Oh, here it is. So stocks fell Friday, which is today. Hold on, where am I? Stocks fell Friday as traders slashed expectations for a December rate cut after signals from senior Fed officials and stronger than expected retail sales data, which is awesome. The market loves that. When people are spending money, that just brings indication that the U.S. economy is doing pretty good. But when those numbers drop and people are not spending money, the market freaks the heck out because the market is like, anytime the market hears really bad data, the market thinks recession. Calm down. I need the market to calm down. Just because the numbers went down a little bit don't mean we in a recession, big dog. Calm down. Calm down. Okay, so let's continue. I'm talking about the retail sales, and that data was released, and it's looking positive. Okay, stocks fell Friday as traders slashed expectations for a Friday rate cut after signals from senior Fed officials and stronger than expected retail sales data. Fed Chair Jerome Powell said Thursday, the solid economy would allow the central bank to take its time in deciding how quickly to loosen policies further. Meanwhile, new data showed 2 months of surprisingly robust growth in retail sales, adding to evidence of U.S. economic strength. That's lit. Okay, that's lit. So that was one of the influence this week that added to the volatility. Volatility just means up and down. Now we have the corporate earnings. So this week there was a lot of earnings data that came out. Earnings just means for like individual companies like Disney, Tesla, and all the others. They all had earnings report. So their data was released basically talking about, did they hit their revenue numbers? How are things looking for production? What new products are they going to be released? This is when the CEO of the company speaks, and they talk about the trajectory of the company and where it's going. So there were 2 really big earnings that happened this week that moves the market. One was Disney and one was Tesla. Y'all know Tesla going crazy right now because Elon Musk was a part of one of Trump's picks. So y'all know that stock going crazy. But anyway, the earnings came out for Disney this week. The earnings came out for Tesla this week. And the earnings has slightly exceeded expectations, which it impacted the stock price positively. So that was another reason why I was a little volatile. All right, so now the next thing I want to talk about is the sectors, like the highlights though. We're just gonna go through the highlights, like what sector was like highlighted this week that caused some things to go on in the market this week. Okay, let's get started. So technology. Y'all know I love me some technology. Y'all know that technology sector, one of my favorites. Okay, so the tech stocks experience mixed performance, with some companies reporting strong earnings, while others face declines due to profit taking and valuation concerns. Now, the energy sector, oil prices fluctuated, aimed the geopolitical Tensions and supply concerns impacting energy sector stocks. So energy sector didn't do so well this week. There was some tension going on. And y'all know the healthcare sector, it dropped significantly this week because of the concerns over the potential appointments in the new administration. So RFK, he taking over, and the market don't like it. So the healthcare sector, it took a dump this week. All right, so this is the overall market this week. Okay, from Monday, November 11th to today, November 15th. The market's initial optimism following the election was tempered by caution as investors evaluated the potential economic implications of the incoming administration policies, including trade tariffs and FICO measures, rising treasury yields, and the Fed Reserve caution stance on rate cuts contributed to the market's volatility. Overall, though, the week was characterized by a mix of enthusiasm and caution, with investors closely monitoring politics, Jesus, I can't say that word for nothing, politic developments, economic indicators, and corporate earnings to gauge the market's direction. And with that, I hope that was helpful. I broke that thing down for y'all. If y'all want to know about the market for the week, come on to come over to that wealth chick. I'll break it down for you. You'll understand what's going on in the market. Okay, you will understand what's going on in the market. And with that being said, that's the stock market tea of the week, baby. That's the stock market tea of the week. Now, if you want to learn some of this stuff, this good stuff, okay? If you want to learn how I retired at 24, trading stocks and investing in the stock market, I need to see you at my next free stock trading masterclass, okay? We're going to get into it. Click the link in the description to register for the next one, and I cannot wait to see you there. With that being said, if you need me, you know where to find me. I hope you have a fantastic weekend, and I'll see y'all on Monday in the next one. All right, y'all. Bye.